Well, thank you very much, everybody. And thank you, Miles, for that introduction. I do think this panel session follows really neatly on from that fascinating and really helpful set of remarks from Sarah. So thank you very much, Sarah, because we are now going to be exploring how we balance on that tightrope and how we avoid falling without that net underneath us. And we all know that the green transition is only going to succeed if properly financed, and that public finance is not going to be enough. We need a massive global shift towards private sector sustainable finance. And huge questions there that we need to answer, and I think this panel is really going to help us. We've got Roberta Casali, Vice President for Finance and Risk Management at the Asian Development Bank, ADB, where she's responsible for the management of ADB's Controllers Department, Treasury Department, and Office of Risk Management. We have Yoshiki Takeuchi, the Deputy Secretary General at the OECD, who served as Special Advisor to Japan's Minister of Finance after a distinguished career over nearly 4 decades at the Japanese Ministry of Finance. We have Michaela Wright, Head of Sustainability at HSBC UK, across commercial, wealth and retail banking. Michaela and her team are responsible for leading the embedding of the net zero and social strategy into the DNA of the organisation. And we have Elizabeth Gillam, the Head of EU Government Relations and Public Policy at Invesco. And in her role, Elizabeth advises businesses and clients on public policy and political developments in Europe. Now, I know from the pre-brief that we had when we discussed what questions we were going to ask, we used almost the whole time of this panel and could have carried on further, so I know it's going to be a really exciting discussion. I'm going to start with some questions to our panellists, and then to the audience, then I'll give you an opportunity, both online and live, to follow up. And we really do want this to be as lively and interactive as possible, so please do participate. For those watching online, you just need to click on the Q&A tab beside the live stream, and the iPad that I have left on that desk will tell me that you've asked the question. Thank you very much, Sarah. But if you're in the room, you can either try using the QR codes, or you could just wave at me. My eyesight's not good, so wave vigorously. So, again, we have a poll which we'd like you to answer as you're thinking, as you're listening to us. And today's polling question to the audience, this session's polling question is, how much progress has your company made with its climate transition plan? How much progress has your company made with its climate transition plan? So please do find that and answer it. And let me just move over to ask the first question. And I'm going to turn to you, Roberta, to start with. And it's been said that the battle for climate change will be won or lost in Asia, because that accounts for over 50% of greenhouse emissions. Could you tell us more about the progress for green transition in Asia from your vantage point in Manila? What's the scale of the challenge, and how does ADB enable the green transition in the region?
Thank you, Catherine, and thanks to UK City Conference for organizing this important event and inviting me, first of all. And yes, as you mentioned, Asia and the Pacific region is responsible for half of the global emission in the world. And at the same time, and let me say that all we know very well how much is the climate impacts and how is increasing in numbers and intensity, really devastating countries and people. So at the same time, this region is the most impacted by the climate, the climate disasters. The region is not on track in any of the 17 Sustainable Development Goals. And this has been recently stated by the progress report made on SDGs for the region that has just been released. We are not on track And for climate action, that is SDG 13, we are even in regression. So the situation is definitely a very bad situation. We have to take actions, and the COVID-19 pandemic has not has not helped us at all. You ask about the scale of challenge is very much significant. Even before COVID-19 pandemic, ADB has estimated that the region has to invest $1.7 trillion every year till 2030 to meet its infrastructure needs for development. So a huge amount of money. ADB is the climate bank for Asia and the Pacific, and is engaged to develop and really to raise its ambition. In 2021, we have declared that we are able and willing to finance $100 billion in climate financing to our development member countries from 2019 until 2030. So a big effort, but let me say that is a journey, as Sarah said, is a journey that we cannot conduct alone. We have to take into consideration climate needs for our development member countries. So the client centricity is a concept, and partnerships is the way in which we can all together reach the results. And let me pause here for the moment.
Yeah, that's great, and I'd love to come back to that partnership point and explore that in a bit further detail in a minute. But before we do that, let's turn, can I turn to you, Yoshiki? Can I turn to you and some of the commitments we heard made at COP? And I think COP26 this year, last year, we saw some really promising steps taken forward, taken in uniting the world, in taking stronger action on climate change. We saw some great commitments and developments from the finance sector. What are your thoughts on how developed countries and OECD members are helping to provide and mobilize finance for climate action, and some of the issues that might affect their ability to meet the annual goal of those hundreds of billions of dollars that we need to unlock for climate finance, as analysed by the OECD?
Well, thank you very much. It's a pleasure to be here to discuss this important issue. And what the developed countries are doing, first, they're providing government money, and the amount of government money is increasing, so that's encouraging. But you know that when it comes to budget, you cannot plan a budget for 10 years. Budget is decided year by year. So budget is only one factor that brings us to the 100 billion target. But what is more important is this partnership with the private sector. And what can the government do from that perspective? That is the question. And of course, we can have some sort of a seed money to encourage the private sector to do greening things. But at the same time, we do have regulations, we do have lots of other tools that can come up with to encourage the private sector to do something that is very good for the climate. And for example, the government has been doing definitions, taxonomies, ESG ratings, verification, certification schemes, and lots of other things to make sure that each corporates are not doing that alone, to make sure that they're doing the same sort of thing. And the important thing is that, for example, in the case of ESG rating, there are lots of ways to do that. But if there are so many ways to do that, each company would get concerned whether or not this is that what we are doing might be rated what? So I think it is very important to have a sort of a common, comparable rating system, for example, to make sure that each company is in level playing field and do their efforts to reach the green financing sort of thing. And actually, OECD has been trying to come up with a sort of a ESG risk policy framework that might provide a sort of a common ground to make sure that the companies are competing or, going forward to the same goal of just transition. I'd like to stop here. Thank you.
Great, thank you very much. Well, I'm actually just going to explore the question of the regulatory framework a little bit further first before coming on to just transition. So, Elizabeth, if I could turn to you, because enabling the transition is going to require the reshaping of legal and regulatory systems, and we're seeing a multiplicity of proposals coming out and great volumes of paper if it's printed as such, which is hardly helpful for the transition in itself. How do we develop approaches that are suitable for emerging economies as well as those for developed markets? And can you give us some examples?
Thanks for the question, Catherine, and again, delighted to be on this panel with all these other distinguished speakers. So indeed, we've seen across, particularly in Europe, who've very much been at the forefront, this whole spaghetti soup of different acronyms, SFDR, CSRD, taxonomies, etc. But we're very quickly seeing, particularly in Asia, that quickly coming along, and the US getting there slowly. But what we are seeing, I think, and when we think about emerging markets, we need to remember that, yes, Europe is setting standards, but Europe only accounts for 8% of global emissions to the 50% that we're talking about. And actually, most of the investment opportunities are going to be in Asia. So a recent BCG GFMA report estimated that 55% of the financing really needs to be going into Asia. And so what we're seeing, unfortunately, is that these standards are being developed, but they only really work, or they're being developed for developed markets and maybe leaving out developing markets to a certain extent. I'll give two examples, one on the data front and then one on taxonomy. So when we think about data, data's always been an issue. It's an issue across the board for ESG, both in developing and developed markets. But we do see that emerging markets, we do see a lower level of ESG reporting more generally. And so in the same way that we often think around in developed markets about proportionality for SMEs, we maybe need to start thinking about what proportionality means for emerging markets. And can we ensure that the regulatory and data requirements that are being proposed, particularly by the ISSB, actually can be achieved by less sophisticated markets? Because ultimately, we don't want the lack of data to be an obstacle to financing making its way to those places where they're most needed. And so really bringing in, everyone into that discussion and not just setting standards that, for those most sophisticated markets. The other one is taxonomies, and we are seeing a range of taxonomies. The EU obviously has its own. China has for a long time has had a taxonomy, but we're also seeing the ASEAN region, Singapore, Russia, South Africa, Venezuela, and a bunch of others working on this same issue. If we look specifically at the EU taxonomy, though, we see that it's very much embedded and enmeshed in Europe and the way that we do business, and it doesn't work very well outside of Europe. Whether that's actually other developed markets, but particularly developing markets. And there's two reasons for that. So one is the legal and regulatory framework that it references. It references EU law, and sometimes those provisions just won't exist in other markets or not in the same way, and assessing equivalence is going to be really hard. But also, as Sarah was discussing, and I think Roberta said, different countries will be transitioning at different rates. And so the level of ambition that we can meet in Europe just won't be reflected in those other markets, and setting an absolute level of emissions or criteria based on what we can achieve in Europe is just going to exclude a huge part of the global economy, and how, not just focusing on what's green, but to what Sarah was talking about, how we talk about greening activities. And so really thinking about how do we focus on those, and also activities that we just don't have. So, in Europe, when we talk about biodiversity issues, we talk about wetlands, but actually in Asia, we're going to be talking about mangroves and other areas. And so actually thinking about, just because we don't have an activity in Europe doesn't mean it should be excluded, because there might be really important areas, particularly when we're thinking about nature, actually those most biodiversity-rich environments are going to be, in Latin America or in Asia. And so thinking about how that applies to them is really important.
Thank you very much. Perhaps an unfair follow-up. How optimistic are you that we are going to achieve some sort of interoperability when you look at the vast array of proposals that's coming forward?
So I think the ISSB is a really encouraging proposal. I think that, hopefully as that sort of starts to bed in, there will be a groundswell. And I think that actually the more that we as financial services, but also business can support that, the easier it's going to be for governments to actually embed that in their regulatory systems. Now, we know that there's going to be some politics around this. The EU is already front running with its corporate sustainability reporting disclosures, and the US is on the other side of the extreme and will take some work to sort of get them to the same place. But I think that that's the genesis of this. Similarly for taxonomies, I think we've got the work of the international platform between the EU and China in particular as a starting point to start mapping the EU and Chinese taxonomies. But I think the challenge there is, as I said, their approach is sort of what's often described as the highest common denominator of where we have the same rules, we'll try and match them up. But as I said, there's going to be lots of areas where, for very justifiable reasons, we will have different rules. And so thinking about actually how do we say, as long as they have a similar level of ambition, they should be deemed equivalent rather than looking for a sort of rather more paper-based line-by-line equivalence of those will be important. So I think it's starting to sort of maybe change our mindset a little bit from maybe a sort of more financial services, very diligent equivalence to more, are we achieving the same level of ambition? Are we heading towards the same goal? And focusing on that more outcomes-based approach to assessing interoperability.
Great, thank you very much. And now I'd like to turn to that question, which is rightly, I think, becoming one of the key pillars of climate strategy, the question of the just transition. How do we ensure that, on the international level, that nations who have contributed at least to climate change, but are suffering the most from its physical impact, receive the capital that they need to make the transition, for example? So, as an international bank, Michaela, how does this concept feature in HSBC's strategy? And what are you working on with your clients worldwide to help enable a just transition?
Thank you, Catherine, and lovely to be joining everyone today and our esteemed panel here as well. So I think for HSBC, we recognise that a just transition, we have a role to play just as much as government and civil society, as been already mentioned. And when we made our commitment to net zero, the biggest impact, well, we recognise the biggest impact we can have is in supporting our clients, and that's clients in high emitting sectors. So it was really great to hear Sarah talk about the need for not just the greening of those assets, but thinking about a smooth transition as that's happening. So we believe that helping our clients understand, first and foremost, that they need to transition, and then helping them understand what net zero is, and then setting up credible pathways to achieve that. And that's led to our more recent disclosures. So we've gone from that initial balance sheet emissions by 2050 target to starting to bring more granular detail and nearer term targets to specific high emitting sectors such as coal, oil and gas and power and utilities, which I think is really important because it provides our clients with some guidance on what needs to be achieved as well. And we do want to work with clients that want to transition. But I think there's a recognition at a point in time, but I don't think it's, in the near term, that if we're not seeing any progress, then we will have to think about that relationship as well. And then I think some of the other great things that we recognise within our policies, when we set out our coal policies, there was that recognition about the 3 billion people that are in Asia and developing countries that rely on coal for 2/3 of their energy consumption. And that if you just exit and divest now, then those people, not only their basic needs won't be met, but you've then got significant job losses in those regions. So I was really pleased at COP26 that we announced that we're supporting the Asian Development Bank's energy transition mechanism, which I think Roberta might talk about, but that really is about helping the early not divestment, but the early retirement of coal and also then innovating into cleaner solutions as well. And that's a really key part of our strategy. It is just one part. We've also committed to $1 trillion up to $1 trillion in sustainable finance and investment in the next 10 years. And then how that has materialised for us in the UK is also a recognition that smaller businesses are really going to struggle more. They don't have sustainability experts within their organisations. So not only are we providing guidance on what net zero means and how to baseline their emissions, we launched a £500 million fund for SMEs that actually was the first in offering discounts as well for them to start greening their organisations. So it's a start, and we recognise that it is an evolving area, and we need to be reviewing each sector. So those three sectors are the start, and we're going to report on another 6 or 7 sectors this year.
Great, thank you very much. I'd like actually just to unpack that question of private-public partnerships perhaps a little further. So perhaps I could come back to you, Roberta, and ask about the role of multilateral banks such as the ADB in the transition to net zero, and the scope and potential for working with partners, whether it's the OECD, whether it's governments, but also with industry and private finance, in order to mobilise climate finance, particularly thinking about developing countries.
Yeah, thank you, Catherine. Multilateral development banks play a crucial role in supporting governments and the private sector towards climate transition. What we do in concrete terms, we finance or co-finance essential low carbon and climate resilient infrastructures. We provide technical assistance. We develop as was mentioned, innovative financial instruments, and we contribute to knowledge and data sharing so that countries and operators, also private market operators, can have a decision-making process that can be more proper and suitable for what is needed, and also can develop an accountability measurement of what in concrete is doing. I mentioned before the client centricity. Our clients are the development member countries. And I mentioned the fact that we must act developing partnerships. So look forward. This is really the battle of our generation, is our lifelong battle. And what in concrete can be done for countries? Help them in define their national long-term plans towards climate transition. So the so-called NDC platform, NDC stands for National Determined Contribution, their long-term plans. So what they have to reach in order to meet the Paris goals. Give a comprehensive understanding and a roadmap strategy. Also enhance the certainty and allows the private sector to intervene in a more proper manner. Another example, the Asian Green Recovery Platform, launched at COP26 to support green infrastructure projects. UK government, through the FCDO, participates in this partnership together with other 3, so 4 partners provided $665 million to develop green projects for the Asian countries. And this means help with the public funds and the partnership, the de-risking of initiatives. So projects that are not bankable become bankable because the Multilateral Development Bank, and in this case, ADB, and thanks to the support of the governments and other partners intervene. Another example that is pertinent to UK is the Urban Resilience Trust Fund, in which the UK contribution is worth 70 million sterling. And this is a multi-donor fund that help development member countries to define urban plans that work to reduce the disasters that are caused to these vulnerable countries. So again, partnership projects and COP26. At COP26 was mentioned, it has been launched, the ETM. ETM is scalable. ETM is a collaborative initiative, and it helps, is a win-win initiative because it helps countries to switch in a shorter period of time from coal to renewable, creating 2 different funds. So we intervene, buying the ownership of the coal power plants and use the revenues to invest in green renewable energies. So really, we can do a lot to fix a comprehensive understanding and a strategy that gives direction to countries and to private sector operators to develop and to go on in the journey.
Great, thank you very much. I want to turn back, Yoshiki, if I could, to you. Now, we heard a lot of promises at COP26 from the financial sector, and indeed you have a raft of potential partners here in this room from financial and professional services and on screen. How can the financial and related professional organisations support the OECD in its efforts to enable the global green transition? What can we do?
Yeah, thank you very much. What can the government do? We can guess. What can the central bank do? She told us. What can the regulators do? She told us. So maybe the remaining question would be what would the financial markets, or what would be the financial association can do? Lots of things, because the institution within the industry can decide what is important. And rather than being told by central central banks, rather than being told by the government, maybe you can come up with more innovative ideas. For example, OECD is now trying to find out a way how can financial institutions can lend more money to SMEs who's struggling with these greening things. And OECD is starting this research, but we're not quite sure what are the good things that each financial institution has done in the past. Maybe good practices. If we can put that together and disseminate it, that might be much, much efficient rather than each banks or institutions, associations trying to come up with the solution. That's one thing. And if I may add, OECD tries to come up with a standard that applies, that can be, quoted by the participants to make sure that they are doing the right thing. And what we had succeeded in the past, for example, is the corporate governance principle. That, I think, was a great success from the OECD's point of view, because each and every big companies are now quite nervous about whether or not they're applying this corporate governance principle. And we are trying to incorporate green factor here. We are trying to come up with a revision next year I think we can have these setting these standards by trying to raise guidelines or principles everywhere. And in that, I also include financial institutions as well as associations. Thank you.
Thanks very much. And from the perspective of the financial institutions and the investors, I'm going to turn to Michaela and Elizabeth and ask you what you think needs to happen so that we can scale up capital markets to enable the green transition. Any thoughts? To you first, Michaela.
Yeah, so I think there's a lot of progress already being made. So we know there's differing estimates of how much is needed for the transition. But I was reading the IEA estimate 5 trillion per year needed every year by 2030 and to 2050. That's just for clean energy alone. But we've seen significant increase in the green bond market. Last year it was over 500 billion, and we talked a little bit about COP26 and some of the progress that was made at COP26 was the financial sector coming together under the Glasgow Financial Net Zero Alliance, and that was a commitment, and we were pleased at HSBC to join that alliance, but there was a total commitment of private capital of $130 trillion there that's now all being mobilized towards net zero. So I think we can definitely say progress is happening. We also we run an annual investor survey, so our global research team, and recently we saw quite a significant shift in the results of the institutional investors now telling us that 94% expect a transformation in the next 5 years in how they want to see their investments across environmental and social issues, and especially if they're seeing businesses taking no action as well. So I think we can see some really significant shifts. So. And I think from my perspective, this is where we've got a real opportunity, because we've talked a lot about coherence that's needed, and when it comes to the standards that are being set and the regulation, and I think we've got a great opportunity if somebody like Elizabeth can help develop that, I think, given her knowledge, but that we can drive that and increase that investment significantly quicker as well.
Thanks very much. And yes, Elizabeth, what are your thoughts? And can you give me some advice for the UK as well, as we try to position ourselves as a global partner on this?
Yeah, so maybe just, I totally agree with Michaela that I think, GFANZ and all of the work that's happened under that umbrella, to Yoshi's point, of really now developing methodologies, developing playbooks for investors who want to progress along net zero, and actually setting out what that work is. So, a really good example of that is under the auspices of the IOGCC. We now have the net zero investment framework that's been developed by a number of asset owners and asset managers to really set out how do you actually translate that net zero goal into a transitional framework that you can apply to all of your assets, and really setting out, what the methodology is, how do you assess companies, but also sovereigns and other asset classes against the goal of net zero, and how do you set those interim goals to move finance towards that ultimate goal of becoming net zero. And we're seeing, as Michaela said, this huge amount of finance that's now being mobilized, but also having a clear guiding framework that we're all working to. Because I think this is the other key point that we're seeing across the industry, which is we're increasingly realizing, and Sarah spoke about this eloquently, it's not about our individual firms, it's about collective action and how we all work together and how we drive to a similar goal. And how do we have the same references so that, to Yoshi's point, companies all have the same, getting the same signals from the market of this is what good looks like. So we also have things like Climate Action 100+. So this is, again, a group of investors and asset owners who've come together to engage with those highest emitting companies to encourage them to set net zero goals. And every year we publish, or Climate Action 100 publishes a benchmark setting out how we're doing and how the progress that we as investors are making in terms of encouraging that change at a system level, because we know that our voices combined are so much more powerful than any of us working individually. I think for the UK, and advice for the UK is, and I think the government's already doing this, but it's about supporting those international initiatives, not rowing your own boat, but really supporting that. So I think, we really welcome the announcement from the UK government that they will be supporting the ISSB. I think they're so far the first government who has made that very clear statement of intent to embed the ISSB standards in their regulatory framework, and we've already seen them following on, using the TCFD as that global framework. I think as they move forward in terms of the next stage, it's really sort of continuing to embed that. As I said, I personally sit on the Green Technical Advisory Group, which is looking at UK taxonomy. And one of the issues that we are going to be looking at is that interoperability question. And how do we make sure that, this is a tool that's not only works for the UK, but actually mobilises the City of London and all of the people in this room towards, this global goal, because ultimately, even if the UK achieves net zero, if we don't achieve it at a global level, it won't have actually helped us in the macro sense. So that would be my sort of quick takeaway for
Great, thanks very much. And I think there's actually, on the ISSB question, a strong argument that was the most significant of all the finance steps at COP, and it's good to see that level of support. Of course, transition was always going to be extremely difficult. The world has been complicated by the awful situation in Ukraine, and I wondered if any of the panel had thoughts on the knock-on effects of the conflict for this important transition. Do you see it accelerating renewables and clean energy? Do you see it, on the other hand, possibly seeing us rush to traditional sources of energy because we have to replace other sources? Now, our time is running short, so I'm going to give people very short time for these answers. Any quick thoughts from anyone?
I've got a quick thought there might be, to achieve energy security in the short term, there might be some unintended short-term consequences, but the UK government announcement today on the energy supply strategy, I think, is directing us in the right direction. 2030, I think it was 90% from clean energy, and I think it could accelerate, and certainly HSBC's view is the hope that it will accelerate the transition to cleaner energy and more renewables as well, and that's certainly a sign I've seen.
Yeah. So you're an optimist. So
I'm always glass full.
Right. Any other thoughts for anyone?
Yeah, I would tend to agree that I think, probably potentially short term. We know in Europe, for example, they have a strategy to make sure that they can, fill up their gas storage in advance of the winter, to make sure that they can, if Russia does cut off supply or they impose sanctions, they can weather the storm. And so that may require, we're talking about LNG, and there may be some sort of short term backtracking on certain pledges, but I do see that, this is very much adding a tailwind to the existing conversations. We've already seen some quite politically fraught issues like the carbon border adjustment mechanism, which in Europe we thought was going to take possibly years of negotiations to drag out, and they actually reached an agreement in record time because of the geopolitical context. So I would tend to agree with Michaela. I think that this is over the long term likely to accelerate that transition and hopefully provide that tailwind to governments to really go full speed ahead on the EU Green Deal.
Of course, what it might do in the short term is add to those increasing energy costs and other challenges which are leading to a cost of living problem, certainly in the UK, but elsewhere too. And that leads me to one of the questions that's been raised, that transition all comes at a cost. How will a just transition ensure that society can afford, how can people afford this without pushing individuals into financial hardship?
Do you want me to take that? I feel that the bank in the room. It's a combination. I think we've talked a lot about partnerships, haven't we? And I think when it comes to the just transition, It's, it's government policy, it's how the banks can support, and then how we can help educate the civil society as well. So there will need to be, certainly for vulnerable groups, I think Catherine, sorry, Sarah was mentioning retrofitting in the UK. And so you're going to have to put some policy in place that can help people invest. But if you do see an increased value to your home, then that'll be you'll get that return over the longer term. So helping people deal with that long-term planning, I think, will be important. And I think that's the same for smaller businesses as well. And then there'll be more vulnerable groups that we will need to put more support in to help. The longer term, if you think about the energy crisis that we're in right now, and the cost of living crisis, that actually these investments will reduce costs longer term. And sometimes, I've worked in sustainability for a number of years, and I look at some of the companies or individuals that maybe took earlier action that are not too worried right now about the energy costs. So there is a lot to be said for, action today will save us a lot of money in future.
Yeah. I think that retrofitting challenge is an example of where we need the sector to be working on new models of financing with government and others, so that we don't have people stranded. Or we're going to need to think imaginatively. Yeah. Now, I'm told to remind you all that you must fill in your poll if you haven't yet done so, and you've only got 3.5 minutes. Do I see any hands waving in the room of any questions people want to ask? I don't see any hands waving in the room. I have a few more questions here, though, when my machine turns back on. There is a question about, are we really viewing this? Is the panel really viewing this as Asia's problem? Is it still dark, I'm afraid? I'm not good with technology today. Are we really seeing this as Asia's problem? It sounds as if we're expecting, the Western world is responsible for the vast majority of the cumulative problems, and it sounds as if we're asking people to forego some of the opportunity, forego permanently some of what we've taken for granted as we've developed. Anybody wish to comment on that?
But I think I fully understand that sort of argument. But if pointing fingers to someone solves the issue, then that's easy, right? I think yes, we might have enjoyed, but we have the responsibility. But that doesn't mean they don't have, they need not to share the burden. Yeah. I really hope, and that's one of the things that when you say about capacity building, improving literacy, I think we all need to do our best to how to say, share the sense of urgency, and if we cannot succeed, we fail. That's the tightrope thing, I guess. So that's where MDBs would come in. That's where I was not quite sure. I can imagine financial institutions so devoted to these kind of things, let's say 20, 30 years ago, but they are now doing at the top, right? So by doing those kind of things, we can I think change the world, and we should never give up. That's my impression.
No, great. Yeah. That's great. With 30 seconds?
Yeah, I was just going to say, I think, I don't think it's about putting the onus just on Asia and emerging markets, but I do think they have an opportunity, which is they don't have the legacy issue that we have in developed markets. And so we've seen this in other areas, particularly in technology, where, we're still struggling in some parts of the UK to update to fibre, whereas when they've put this in emerging markets, they just go in and they put the newest technology straight in. And, we look in China, they've gone straight to mobile payments. They've skipped all the legacy banking, and they've just gone straight to mobile. So they actually have an opportunity, which is by not having had all of these legacy problems, of how do we incentivize them and give them the solution so that they can actually leapfrog us and go straight to the latest emerging technologies, rather than following the same path that we did, which maybe isn't necessary because we now have the advanced technology for them to go that extra step without sort of having to follow the same path that we
Great. Did. Thank you very much. I'm going to have to go to the poll results now, which I'm told are just about to appear on the screen. Yeah, there we are. Oh. Look at that. Oh. Well, you're all doing fairly well. That's rather good. But as we know, The glass is half full.
Half full.
The glass is half full, more than half full, I would say.
That's
but we
good.
need to remember it's not the individual action that counts, it's the collective action.
It's the collective action also.
Yeah. So look, thank you. I knew you'd be a great panel, and you absolutely have. Can we give a round of applause to our panel?